We got a lot of chatter coming from them yesterday. Federal Reserve Governor Christopher Waller stating that he's open to a half-point rate hike in December. Now, this is as long as economic data cooperates. Okay. Now, on top of that, San Francisco Federal Reserve President Mary Daly stated she sees the Fed raising rates by another full point or more before even considering pausing rate hikes. I mean, Garrett, this is a big mix here. What are your thoughts on where the Fed might be heading next? There's probably going to be some dissent. I mean, where do you think they're going to land in December?
I think people are going to be very, very surprised when the odds of 75-point hikes start to surge back again within the next couple of weeks. And the reason for that is not because of Daly or what Waller has said. It has a lot to do with the CPI and the PPI numbers, what just came out. The PCE inflation number, the Fed inflation number, is not going to include the healthcare number that helped pull down that CPI figure to 7.7. More importantly, I think we do get the PPI and CPI numbers before the next Fed meeting. Why is the market tanking this morning? Because Bullard came out and said, he finally said it. They finally said it. They finally said it, because I've been saying it for 6 months. 5 to 7% for the Fed funds rate in order to get inflation down. This is Bullard effectively doing what he does and coming out and telling people that by trying to continue to buy into these rallies, they're committing economic suicide, buying some of these zombie stocks and some of these other companies that have no business being public and are likely probably going to either go to zero or going to have to be taken back private at some point. So this may be the very start of another leg down for this market. Bullard has never pulled any punches. And I look at this and I say, all right, 75, you get 50 in December. Maybe you're going to get another 50 in January. But again, it looks very clear that we are heading higher in order to get that CPI number down. We have never in our history pulled inflation under the down without bringing the Fed funds rate above the CPI number, ever.
Oh man, well, leave it to Bullard to kick the bulls where they're feeling it right now, and we are down pre-market. Shah, are you in the same boat as Garrett? And if the Fed does not slow down, I mean, where do you think the market's going to go? In a frenzy?
Yeah, first of all, I am in the same boat as Garrett. I have been calling for a 50 basis point hike in December. I still am going to maintain that, but I don't think they're going to pause in terms of continuing to hike at maybe 50 for a few more meetings. They kind of signaled that they want to already, cut back on the 75 basis point hikes. They front loaded enough. They're going to be clear, and I think that's telegraphing what Bullard is saying, that the position remains. We are going to move rates higher and keep them there for longer. For those of you who aren't listening, that's what they said. So the market is in a vulnerable spot right here, having risen so rapidly. It's brittle in terms of the breadth. It looked good, but really everything gapped up so much. And to point to Kenny makes a lot of the times, is nobody's buying those gaps. You don't have an opportunity to buy those gaps. And if you do end up buying the tail end of them, you want to get out as fast as you can if things turn tail. So you start to sell. So we're at that point once again, where we got close to the downtrend line for the major indices. We're about 2 percentage points away from an S&P. And next thing you know, here's resistance, and now we're heading back down. So Fed-wise, I think the market is prepared for whatever the Fed's going to do, but hasn't baked in the likelihood of recession or rates being higher for longer.